What is the QuickBooks Opening Balance Equity Account? Why are there transactions sitting there from the beginning of time? How does it get messed up, and how do you clean it up? Hi, I'm Veronica Wasek, the unstoppable introvert and founder of 5MB Academy, where I help bookkeepers to build confidence and profitable services around cleanups and diagnostics. In today's video, I'm going to talk about the Opening Balance Equity Account in QuickBooks Online. I'll explain what it is and make sure that you stick around to the end of the video, where I'll show one of the most common mistakes that untrained users make and how you can clean it up. Let's get started. Let's take a look at the QuickBooks chart of accounts. So from accounting, go to chart of accounts. You'll scroll down until you see an account called Opening Balance Equity, and notice that the account type in QuickBooks is equity. So what is the Opening Balance Equity account in QuickBooks? It's really an account category used to track the opening balances in accounts as they're being set up in QuickBooks. This is the reason why you will likely see a lot of transactions in the Opening Balance Equity account that date back from the inception of the company. So when a new bank account is set up, QuickBooks will record a balance to the Opening Balance Equity account. So it will debit the bank account. It will credit the Opening Balance Equity account. When you set up other accounts, it'll do the same. So for example, let's go to New Account. And let's select an account type of bank. And then you'll notice here where there's a section to enter an opening balance and the date as of which the opening balance is being recorded. So let's just do a test here. Test bank account. The account type is bank. The detail type is checking. And I'll enter an opening balance of $1,000, and we'll enter it as of, let's say, January 1, and we'll select save. Okay, so now we can see that we have that balance in the test bank account. So I'm still on the chart of accounts, and then we have opening balance equity, and now we have $1,000 in the account. And then you can see that that's the entry that we made for the opening balance for the test bank account. Going back to the chart of accounts, select new account, and then you'll see for various other types of accounts, for example, other current assets, that you'll have this area to enter an opening balance and then the date as of which that account is being added. Is the concept of an opening balance equity something that we would see outside of QuickBooks? Actually, no. Opening balance equity is not technically an accounting term or something standard in the accounting industry. It's really an account category that QuickBooks uses just to be able to allow the user to begin using QuickBooks by setting up opening balances. Now, are these opening balances correct? Maybe yes, maybe no. In our case, for the test bank account, this balance may be correct, it may not be. What we see a lot of times is that the starting date may be in the middle of the year instead of the beginning of the year. So for example, let's say that someone sets up a bank account and they do it as of today, which is August 18th. Then you don't necessarily want to start a new bank account on August 18th. You'd likely want to do it as of the beginning of the year or perhaps the beginning of the month. I told you that I would show you the most common mistake that is made in QuickBooks with the Opening Balance Equity account. So let's say that someone wants to delete an account in the chart of accounts, but this account has an account balance. So typically they would go in the chart of accounts, go to the down arrow and say make inactive. They'll confirm that yes, they want to make it inactive. So QuickBooks deleted the account, and you'll see now we have computer equipment and it says deleted. So now we look at opening balance equity and we see that we have a debit or a negative balance in QuickBooks. Let's view the register. And now we can see the entry that QuickBooks made. So because the account that was deleted had a balance, QuickBooks had to enter that balance somewhere. So rather than saying, hey, no, you can't delete this because there's a balance, it's letting the user delete the account. But now it put that entry to opening balance equity. So let's edit this transaction just to look at it further. And you can see the credit to the computer equipment account and the debit to opening balance equity with a description of created by QuickBooks Online to adjust balance for deletion. So this poses a big problem because we typically don't want to just delete accounts with balances and have things go into opening balance equity. So how do we fix this? All right, first of all, we need to go back to the chart of accounts to make this account active again. So back to the chart of accounts. You may not see this account because it has been deleted. So you'll want to go to settings and make sure that you click show inactive accounts. So now we can see this account. So we'll go here to the right and make the account active. So the account is now active. So let's take a look again at the register for opening balance equity. Click to edit the transaction. And now we're going to delete this transaction. So this is going to delete the adjustment that was made by QuickBooks. From the bottom, select delete, confirm. So now you can see for opening balance equity, we have a balance of $1,000, which was the balance for the test bank account that we entered. And then when we go back and look at computer equipment, the account is back and so is the account balance. So if this account actually needed to be adjusted, you would not delete it from the chart of accounts. Since it has a balance, you would make another adjustment, maybe a journal entry or some other type of adjustment to adjust the balance in the account. Going back to opening balance equity. So now we have $1,000 for the test bank account that we set up. What do we do with this? Typically for a balance that is correctly entered to opening balance equity in QuickBooks, once you make all your adjustments to opening balance equity, then you would close out the balance in opening balance equity to retained earnings. And you would do that with a journal entry. So let's go ahead and do that. Go to create. Select journal entry. Make sure that you enter the correct date. I'm going to use August 31st as the end of the month date. I will debit opening balance equity, enter description. Then I will credit retained earnings for $1,000. Same description, save and close. Okay, so now for our opening balance equity register, you can see the journal entry that I just entered. So now the balance in opening balance equity is 0. We'll go back to the chart of accounts. So there it is. And then the adjustment was made to retained earnings. The retained earnings account in the QuickBooks chart of account does not show a balance, but it is in there. And actually we can run a report and then you can see the adjustment that we just entered. Okay, so I hope you found that helpful and that it explained what opening balance equity really is in QuickBooks, how to identify problems, and how to identify a cleanup solution. Check the description below to learn more about my free Smart Review checklist, where I show you how I review my clients' books in just 15 minutes. I'll see you next time.